power of 3. So these are the specific things. Let me share my screen for you guys. There you go. These are the specific things that I'm going to be covering in this day 2. Scaling time frame, so obviously going from the higher time frame down to the lower time frame, using the fair value gap to determine which time frame to use. That one's highlighted because I believe it's one of the most important ones. Then obviously the daily power of 3, and then session power of 3. So power of 3 consists of 3 different things. So power of 3 consists of accumulation, manipulation, and distribution. Let me take some notes for you guys. Accumulation, manipulation, distribution. Whoever came up with these words, those are some nice words. Accumulation, manipulation, distribution. There's 3 things. That's what power of 3 is. It's 3 things. What is accumulation? Accumulation is another word for consolidation. So this is accumulation. You can see price moving sideways right here, right? This is accumulation. Price is building up orders of bearish sellers and then bullish buyers. When it builds up these orders, there's highs and lows. And whenever these highs and lows are taken out, typically that's when price is manipulating, and it would run towards both sides of the market. So we just, after this huge accumulation in the weekly time frame, finally ran on the buy side. So at some point, we are probably going to reverse and take out these lows, especially these equal lows. Really nice liquidity. So accumulation, manipulation, and distribution are the 3 things that consist of power of 3. Now, accumulation, manipulation, and distribution don't just occur in one daily candle. They also occur in every session. That's because that's the way the market works. The market in every single session, let me scale back down to the 30-minute time frame just to show you guys. Every single session, like whether it be lower time frame or like 30-minute time frame, it aims to do the same exact thing. Let's see if I can put this away somewhere. There you go. So every session aims to do the same exact thing. It aims to accumulate orders. So you can see prior to Asia session, we accumulated a little bit. It's not going to be like very drastic like you'd think on the daily time frame. I'm just going to get rid of this for now. It's going to be like tiny. It's a lower time frame, especially because we're looking at the session. So this is a form of accumulation right here, right? We accumulated orders, then Asia session begins, we run on the highs, and then we go and run on the lows. When the lows are taken out, we get a little reversal into a little premium area, like I covered in the last video. We got premium discount. When it comes up into the premium, price obviously sold off further here. We took out some more liquidity and then ran up. So the power of 3 here was accumulation. We got some manipulation on buys, manipulation on lows, and then we got distribution. Okay, guys, so that's how it works. It's very simple. Every session typically aims to do this. So in between Asia and London, once again, look, we slowed down a little bit. What do we do in the next session? Accumulation, manipulation on the lows. Then we took out the highs, pulled back a little bit, and then continued higher. Took out the highs here of Asia session. So session highs, pretty significant area to be taken out. And then we obviously reversed. And this daily candle was bearish. Same thing right here for New York session. In between New York session, we had some accumulation. It didn't really have to run any higher than this because we already took out a pretty major level of liquidity right here, and then we ran on the lows. So you can see every single session has some portion of accumulation, manipulation, and distribution. And this exact thing is the same, like works the same way in like the higher time frame. But think about it like this. You guys remember that indicator that I was showing you guys in the first call? Daily candle on the lower time frame, right? So we're looking at this daily candle, and you can see here we got the open. We get the manipulation above like the high of the open, which creates the wick. So everything above this open, which is right here, is just the wick. Sorry. So everything above this area right here, that's just the wick right here. This is all just the wick of the daily candle. So it's aiming to manipulate above this area. And if you know that the daily candle is likely aiming for sell side, then you're trying to get in anywhere above the open of the daily candle. Another concept that is vastly used and known is called the, just gonna check in case people are telling me they can't hear me. Okay, somebody's spamming my chat. I'm gonna ban them. Okay. So accumulation, manipulation, distribution. Same thing works on the daily time frame. So if you don't just scale in and think about it in the term of the session, like let me delete all this and show you guys what I mean. Okay, I'm not sure why this isn't letting me delete it. So if we zoom out and just think about it in terms of what the daily candle did, you can see that this entire area was accumulation. Like it didn't really leave the range. Like if you were on the lower time frames, this would have given you an entry, right? We have a Asia session expansion away from the bias. We got a 30-minute fair value gap. It closed below this fair value gap. This fair value gap turned into a bearish IFEG. And this bearish IFEG was used as a bearish confluence that pushed price to the lows, right? In terms of the lower time frame session, you could have caught a beautiful trade. But we're thinking of the accumulation, manipulation, distribution, power of 3 in terms of the daily candle. And on the daily candle, you can see this was really just another longer form of manipulation or accumulation. Then we got the manipulation, which took out the lows right here. These lows, ran on these lows. Then it took out the high, ran on the high, which is the manipulation, right? We got accumulation, manipulation, and the distribution happened in New York session. Boom. We expanded towards sell side. So is everyone following with that? That is how the power of 3 on the daily time frame works, and just what power of 3 is in general, which is accumulation, manipulation, distribution. Okay, now in order to figure out where the daily time frame is going, where this daily candle is going, you need to learn how to find the daily narrative. The daily narrative is quite simple. Like people are talking about daily bias and you're like, okay, how do we find daily bias? Daily bias in reality isn't as complicated as you think. It's in the name. If you're looking for the daily bias, does anyone know what time frame we are going to be looking for this on? Drop it in the comments, guys. If we're looking for the daily bias, what time frame are we going to be using? I can wait. The daily time frame. Boom, Tim. Thank you. We're going to be using the daily time frame. Okay? So if we're looking for a daily bias, we're going to go to the daily time frame and really figure this out. Okay? Right here. We had a daily fair value gap. This was obviously a bullish fair value gap that would have technically projected price higher. But if we think about it in terms of like that same exact Asia session model that I use, if you guys saw the PDF, let me search it up for you guys. So my Asia session trading model starts from the daily time frame and I scale down until I get my confirmation. On the daily time frame, here we have a daily bearish fair value gap. So obviously this was used to push price lower. Then we scale down to the 30-minute time frame and you can see even though these candles are clearly respecting the midpoint of this fair value gap, why did I still wait for it to close below before taking shorts? Why did I not just get in longs? Because the daily time frame was bearish. Okay? So if the daily time frame is bearish, even if it respects some 30-minute gap, that's not going to push price higher. Because we're running from a daily bearish gap, we also got a sweep of liquidity. So sometimes when we sweep liquidity and we're in a premium, because the discount is down here, right? We do not want to be buying from the premium anyways. So if you think about it in terms of this move right here, like we have a swing, we have an order block, and we have a swing move right here. So we can mark out from the low of this order block up to the high. Right? We optimally want to look for price to dig lower into the discount before we would buy anyways. This is a premium for value gap. So it's not always going to be respected. And you can see here, we also swept some liquidity. So it's exactly what my Asia session model looks like. It's a sweep of the highs, run down, close below the IFEG, and then obviously we run lower from there. But the next daily candle ended up being really bullish. We ran back above it. But you guys get the point. The daily narrative at this time, after getting our like first big bearish candle, like look at all these previous bearish candles so far on gold. They've been super tiny. Finally, we got a pretty big bearish candle. Like price is clearly trying to reverse a little bit. So going into the next day wouldn't have been too wrong of you to expect some sell side. You scale down, you find not only is there like a overarching bearish narrative, but on the lower time frame you also see this 4-hour gap. You can see this 4-hour gap is likely to push price lower. So that's when you scale down and then you look for confirmation. Confirmation for you could have been this IFEG on the 30-minute time frame during New York session, like after we ran. You guys understand that the daily narrative here was completely bearish, because not only did we get accumulation right here, right? We got a whole bunch of accumulation. Not only did we get manipulation, where we took out lows and we left some highs, we left a 4-hour gap. Then when we came up and took out Asia session highs and came into this 4-hour gap, obviously price is going to run down from there. That's a bearish confluence. You want price now to close below this daily bullish gap if you're bearish. So if you were expecting price to close below this daily bullish gap, then obviously even though it respected it here, it's likely going to run down and close below it. So that is what we were expecting there. That's what happened. That's how you find the daily narrative. It's just coming from the daily time frame. And yes, right now at all-time highs, it's going to be quite difficult. It's going to be really difficult to find, figure out how to trade this. By the way, guys, everybody who's tuning in and is watching this, I did make a slideshow right here. Trading all-time highs. So if you want to get access to this PDF where I break down exactly how you would trade and kind of like a trade recap of everything that happened here, join the Telegram in the description. I'll be sending it out tonight. Okay, guys, so daily narrative. Sometimes it's much simpler. Like here, you get a daily bullish fair value gap. It taps into the daily bullish fair value gap right here. We can go into replay mode, come into this gap. You know that the daily narrative here is bullish. So what you do, you wait for Asia session to open up, the first session of the day, because you don't want to be trading pre-market. You can see we had a no-wick candle right there. You guys know I love aiming for no-wick candles. It took out this low. We tapped into the daily bullish fair value gap for the first time. We missed this fair value gap right here. You see that? We barely missed it right here. We have a liquidity to aim for. We just took out liquidity. We took out a no-wick candle. I wouldn't even look for confirmation right here. If I'm going to be honest, I wouldn't even look for confirmation. I would just long from here. Boom, we got an IFEG now. We touched back into it, and we got a daily bullish candle. Do you guys understand how simple it literally is to trade? Like, if you can genuinely identify gaps on the daily time frame, find your daily narrative from those gaps, then go to the lower time frame and apply all the concepts that I taught to you guys in day one, you have a complete model that you can use. Like, this is a huge move. If you guys did what I did, like even with like $100-200 in your live account and you full ported it right here in this entire move from this daily gap, you would have a few $1,000s right there. If you're scalping on a funded account, you enter off of like confirmation on the lower time frame, you have a few $1,000s right there. You wait for confirmation up here, you enter right here, you would have a few $1,000s right there. Okay, guys, like genuinely, there's a algorithm that runs according to these specific concepts. You find the daily narrative using gaps, using the FEG now to determine what time frame to use. So right there on the daily time frame, I pretty much just showed you guys that I'm looking for the daily narrative, daily bias on the daily time frame. Obviously here, even though we tapped into it on the next candle right here, this is still a bullish for value gap. We still respected the midpoint. So you could have gone long after that day. Maybe you took a few losses because it ran lower than you expected. But then you go long and you make it all back in the next few days of buy side. Okay, guys? Everybody following? Yes, need more learning. Let's go. Okay, so that's how you find the daily narrative. You use the daily time frame, you look for gaps on the daily time frame, you wait for a new daily candle to tap into the gap for the first time, you wait for it to be respected. Once it respects it, then you could go long, right? If it closes below one of these gaps, you're obviously now going to be looking for shorts. If it continues running lower from these gaps, you're going to continue looking for shorts. Like once gold obviously turns around for a temporary period and starts melting. US economy goes really bullish. Then you can start shorting gold and you can look for these daily time frame things. Okay? Next thing. using the FAG to determine what time frame to use. So let's go back right here. Let's go back right here into this daily candle. So we're wondering, okay, what time frame do we use, guys? There isn't always going to be gaps, not going to lie. There's not always going to be gaps. Okay, we got the Noah candle, and Asia session is about to start. Boom, Asia session started. We're wondering, okay, I'm looking for a trade. What time frame do I use? You go to the 1 hour time frame. Is there a gap right here on the 1 hour time frame? Let's take a look at this. So clearly there's no gap on the 1 hour time frame right here. Let's see. I didn't mean to do that. Right here. Is there any gap on the 1 hour time frame right here? Like in current price action. There's a 1 hour gap up here, a bearish one. It used it to go down. But is there a gap that we can use to to invert, like to flip? Obviously, if we're using the 1 hour, we would have to wait for it to come all the way up here for it to flip that gap. So we scale down a 4 hour as well. Let's go to 4 hour. Is there any gaps on the 4 hour whatsoever? Tell me, guys. Is there any gaps on the 4 hour? No, we got a little rebalance right here. We rebalanced this one. There's absolutely zero gaps. There's just an IFEG right here. So if we want to see longs, we'd want to see it run all the way up above this area, which is even higher, right? That's not really relevant to us because we're looking for longs. We don't want to look at this bearish confluence. So we scale down to the 1 hour. If there's nothing on the 1 hour, no gaps right here on the 1 hour, like I'm talking about like a gap right here, we would have to wait for one more 1 hour candle to close to find a gap on the 1 hour. So we scale down to the 30 minute and all of a sudden we have found the gap. This one's relevant. It's close. So now we wait for it to come up after taking out this low. Boom. It came up into it. One more candle because we're bullish. Okay. One more. Boom. Now we've closed above it. Now we have our confirmation. 30-minute time frame is the time frame that we use. Why didn't I go to the 15-minute time frame? Because I had a 30-minute. And 30-minute is more significant than the 15-minute. And there is a gap on the 30-minute. Okay. So you basically use gaps by scaling down from the higher time frame, and you find a gap on whatever is the highest time frame with a gap. If there's one on the 4 hour, then you're going to be using the 4 hour for your narrative. Something is making a weird noise in my room. Whatever. Okay, you guys are following with that? Let me show you guys another example. Scale back out to the daily time frame. We're hopping in a new daily candle. Let's look at this one, for example. Boom. Okay, we're looking for price to pull down into this bullish gap so that it can go higher. So we start scaling down. We wait for the new day to open first of all. 30-minute time frame. Whoopsies. Okay, so here's when Asia session started. We were looking for it to tap into this bullish gap, right? Now, let's think about it. Okay, we're now on Asia session already started. We finally tapped into it. So you might have been able to go short. Maybe you didn't go short in Asia session, right? That doesn't matter. We have a daily bullish narrative because we just tapped into a daily for value gap. So now we know this daily candle, which is currently bearish, is going to run up because we just tapped into this area right here. On the 30-minute, sure, there is a gap right here. Let's see on the 1 hour. On the 1 hour, there's a gap right here. So am I going to use the 30-minute or the 1 hour? Everybody in the video call, in the comments, are we going to use the 30-minute or the 1 hour if there is a 1 hour gap? Andrew says 1 hour. Okay, who else? What do you guys think? One hour. Okay, we are going to be using the 1 hour. Why? Because 1 hour is more significant. The 30-minute candle can run up here, close, and we're like, oh, we're going to run down. But then the next 30-minute candle opens, it runs up, and all of a sudden the 1 hour candle closed up here. So the 30-minute candle would have been deceiving you. The 1 hour candle would have told you the true narrative. Okay? Now, we scale down or scale up to the 4 hour and check if there's 4 hour gaps. So if there is a 4 hour gap, it's up here. So until it gets there, we can still just use our 1 hour gap, which is slightly lower right here. So we didn't get to the 4 hour yet. We can wait for it to tap here, and then we can target that from there. Okay. That's essentially what we would be looking for. You can see 30-minute time frame. We close inside of it. This would be like tricking you. We also got a 30-minute gap right here. You might have been able to just use a new gap after this fill. You might have been able to hop in and just expect it to run up and close above the gap. Now we closed above the 30-minute, but we have yet to close above the 1 hour. So let's see what happens. Do we get a bearish candle right here? No. Okay, we got a bearish candle that tapped into it. 1 hour candle also did not respect the... Okay, so see what I'm talking about? On the 30-minute time frame, technically, let me delete all of these lines so it's clear for you guys. So we're running from the daily bullish for rally gap. And right here, you can see on the 30-minute time frame, we already closed above the 30-minute gap. But on the 1 hour, we have yet to close above it. So the 1 hour can totally start running back down. It can totally do that. Obviously, it's going to run up because the true narrative is bullish. And you would have been tricked right there because you would have tried to take longs off the 30-minute. You would have caught a little stray. If you were scalping, that might have caused you to take a loss. Obviously, the overall narrative is still bullish. You probably would have still been able to catch a beautiful trade from the 30-minute. But finally, we closed above the 1 hour, right? That's the most significant time. I'm just talking about sometimes people use the 30-minute. And then 1 hour doesn't actually close above, and it will actually run down. Like, I've seen it happen to myself before. That's why I'm telling you guys to be careful for this. You have to make sure you're always using the most significant time frame with a gap. Otherwise, it will literally turn around on you and cause you to take some losses. There you go. We tapped in on the 1 hour, dug a little deeper because of the 4 hour. Remember, there was a 4 hour gap right there as well. So on the 1 hour, it closed above, but on the 4 hour, it didn't. Right? So we totally got some sell side right there. We're still staying above the gap on the 1 hour, and we obviously would run higher for the day. There you go. We're already inside of the next day. But you guys get it, right? We got a 30-minute gap. We waited for it to close above the 1 hour. Then we finally wait for it to close. Now guys, in the next day, we're not going to use 30-minute or the 1 hour. We're going to wait for it to close above the 4 hour for the overall narrative. Because look, it didn't close above the 4 hour, melted. A big bearish candle melted. Finally, we closed above it, but that was like CPI or something. Bang. Okay, so using the for rally gap to determine what time frame to use. You essentially scale down to the highest time frame with a gap. Scaling time frames, what that means is just starting from the highest time frame. Make sure you know what's going on the 3-month time frame. Right, we got a gap on the 3-month time frame. Maybe next month, guys, by the way, next month when the new 3-month candle opens, we can potentially be getting a immediate rebalance right there before it runs higher. So we might be able to catch a beautiful 3-month immediate rebalance. If we get some sell side from the next month, then that would be a really nice area to go long from. I'll be looking forward to that. So keep an eye on the 3-month time frame. Even the 3-month is super significant. I think there's a 6-month time frame as well, and because we're pretty much at the end of the year, I missed my opportunity to trade the 6-month time frame. But I think that's too much. Keep an eye on the 3-month time frame. It's more relevant. It's the quarters, right? There's 4 quarters of the year. There's pretty significant 3-month gaps. It hasn't tapped into any of these 3-month gaps in a long time, right? We tapped into one right here, and from there, look at this fat move. But think about it. Next time we tap into a 3-month time frame for value gap, that's going to be significant. Like, we're going to get a huge move from that. So keep an eye on that. Monthly time frame, obviously super significant as well. You have to keep an eye on this. We got a monthly rebalance right here. That was a beautiful monthly rebalance. We ended up running a lot from that. Weekly time frame. Scale down. Know the narrative on every time frame until you get to a daily time frame. Then you're looking for the daily narrative. That's when you hop into the lower time frame and look for confirmation. Okay? Next. Time frame alignment. So what does time frame alignment mean? This means that if there's a 4-hour bearish for rally gap and a 1-hour bullish for rally gap, which one do you use? How do you know where it's going? And I probably should have covered that one first, but you guys should probably know the answer to this now. In order to understand which one of these is going to be respected, because sometimes there's going to be a 4-hour gap that isn't going to be respected, right? Let me look at one. Like this one, for example, exactly what we were looking at. Why did this one get disrespected? Somebody tell me. Why did this one get disrespected? Because we had a daily bullish for rally gap that we were running from. Somewhere here, there was a daily bullish for rally gap. We dug into the daily bullish for rally gap, and we're obviously going to run up in the next few days because we just tapped into a pretty significant daily time frame confluence. So that's why even though we have a bearish 4-hour gap here, even though it respected it, we're still going to run up, close above it, and then go higher. Okay? So obviously that was a little tricky range that probably wouldn't have given you opportunity to enter because clearly it was respecting all these 4-hour candles. And then finally news hit on Friday and we ran up like crazy. This was CPI, I believe. Friday 05. No, this was NFP. Because this was the first week of the month, first Friday of the month. Time frame alignment. Make sure that you're using the highest time frame narrative to figure that out. If there's a 30-minute bearish and a 1-hour bullish, you're going to obviously look for the confluence that's supporting the narrative. So right here, for example, so there's a bearish gap right here inside of a bearish 4-hour, and there's a bullish gap right here that's after it ran from the daily. So which one are you going to use? Are you going to use the one that's supported by the 4-hour time frame, or are you going to use the one that's supported by the daily time frame narrative? 4-hour or daily narrative. Daily is going to be more significant and it's going to run up in the next few days. 4-hour might run down with one 4-hour candle. Like here we got London open, which is a new 4-hour candle. We ran down from the 4-hour. But then we ran back up from a 30-minute gap. Why? Because we're bullish. Right, guys? So make sure that's what you're doing. When you're aligning your time frames, you're using the highest time frame narrative. Purpose of each time frame. So the daily time frame, the weekly time frame, the 3-month time frame, monthly time frame, those are all used for narrative. Okay? Lower time frames like 1 hour, 30-minute, 15-minute, 5-minute, 1 minute. I even use the 1 minute, guys. You think that I'm a swing trader and I always stick to my higher time frames? I use the 1 minute for almost every trade. The purpose of each time frame, right? The higher time frames are for your narrative. The lower time frames are for your confirmation, and like even lower from 15-minute and under to 5-minute, 1 minute. Those are used for precision. Okay? So let's write that down. Let's cook this up real quick. 1 day, 1 week, 1 month. Time frames are all used for narrative. 30-minute, 1 hour, 4-hour, used for confirmation. And then 15-minute, 5-minute, 1 minute, even 3-minute. If you like using the 3-minute, this is used for precision, making sure that if you're scalping, you get the most precise entry possible. Okay? You take a screenshot of that. That is the purpose of each time frame. Session power of 3. So we did cover that already, but essentially the same power of 3 that we would be looking for on the daily time frame, where we get a accumulation, manipulation, distribution. We would be looking for that inside of each session. So here, Asia session manipulated into the daily gap. You can take a look at what happened prior to Asia session. Okay, we got a no wick candle. You can see right here, no wick candle. We got a daily fair value gap down below that has yet to be tapped into. Let me delete everything and show you guys what I would have done inside of that daily range. This one, right? Boom. I wanted to mark it out, I forgot. Okay, we got a daily bullish gap. If we're looking for the market to tap into this daily bullish gap, because it has yet to tap into it, we get a no wick candle, which I love seeing them. Like, I love targeting them. If they exist, I love trading to them. And if it runs into it, it's a great area to reverse from it. It's a beautiful concept in general. Okay, so we see that. Asia session starts. And we run down from this. Okay, new 30-minute no wick candle. Asia session has yet to start. Boom, Asia session started. We ran on this one. Okay, got some sell side. Oh, we might have missed the top one. But let's say, for example, this one right here. We tapped into it as soon as Asia session started. We ran up, we dug into this one and started running down. Okay, you get into a lower time frame and you target this area down here, which is your daily bullish gap. Boom. So this would have been the accumulation where we kind of built up some area of liquidity. Even this no wick candle, that's a good little area that accumulated orders. Like, it had so much of a gap right here. Price then came up, filled this gap up, and then ran from there to the daily gap. We got a whole bunch of manipulation, and then we distributed from the area. So distribution, sometimes manipulation's a one-sided move, and then distribution just literally moves back from the area that got hit. So if there's a target right here that got hit, then distribution after this target gets hit just starts consolidating while moving away from it. And that's pretty much what happened here. We hit this target, huge move in Asia session, then we slowly started moving back up from that area in the next two sessions. See, it's not a sharp move because we already hit the target for the day, which was this daily gap. Then we just started reversing from that area. Okay. Session power of 3. Done. Market structure on different time frames. So this is similar to finding your daily narrative. Your market structure, which would be like order blocks or like literally a break of structure where it runs up on the high. You want to make sure you know like liquidity really good for this topic. Well, like this, for example. This is a market structure shift where we have a high, we have two bearish candles. When it started running above this high, you can see we had an order block and a new gap formed. This is a good market structure shift. It pulled back, it filled this gap, and it tapped into the wick of this order block. Boom. We got a little move higher from there. No new gaps from there. I would have probably just stopped trading because price was just started chopping up. This is the distribution area of the move, which happens a lot. Like, especially on gold, we get huge moves. Like, sometimes it's Asia session consolidates. London's the one that gives us a huge move, and then we expect price to do something in New York session, and New York session just starts consolidating. Why? Why does this start to happen? That's because there is already a huge move that happened, and you just expect price to start accumulating for the next big move. The target has already been hit most of the time. You just have to get better at identifying the daily narrative. Like, if you can identify the daily narrative as to where it wants to go that day, then you'll be trading this move here, and when you see it already hit the target, okay, I'm done. TP, I'm done trading. It already hit the target. It might just consolidate. Maybe it moves that day, but that's fine because most of the time after a big move like this, it will consolidate. So it's better not to be in the market, better not to risk your money inside of some consolidation. Okay. Market structure, different time frames. So 5-minute market structure, similar to this. Let's hop into like a lower time frame variation of this right here. We're running from this gap right here. How could you have gotten in earlier? If you're expecting that to happen, you got these bearish candles, you tapped into it again. How would you have been able to execute on the lower time frame? So notice how I used order blocks and a gap to get into my entry right there. Scale down to the 1-minute time frame. Wait for it to tap in. Boom, it taps into the daily time frame. You just look for the gaps. You look for order blocks. Okay, right here we have 2 bearish candles after a bullish candle. Once it takes out the high of these bearish candles, we would have a new order block, right? Boom, we took that out. Did we get a new gap? We also got a new gap. We got a new gap right here, and we have a gap down here. Now, maybe it didn't tap into this lower gap, but you're afraid that price might just run without you. So you hop in right here. You put your stop loss at the daily gap, and you swing trade it. Boom. Beautiful little execution that you would have been able to hop in from the 1 minute time frame. This is how you use the 1 minute time frame. Super precise. Like, you don't have to do a huge stop loss that factors in for the daily gap. You hop in, put your stop loss below the low, put your stop loss at the daily gap or below the fair value gaps, and then if it takes you out, you just re-enter at new confirmation. That's all you're looking for. That's how you can also utilize market structure on the lower time frames. Okay? And then on the daily time frame, market structure just comes from the narrative. You're looking for gaps and whether the gaps are respected or disrespected. So right here, for example, we got a bearish gap on the daily time frame. We respected it. So at the time that we respected this the first time, we were still bearish, and you can see we ran down 1, 2, 3, 4. But then we dug into it and started consolidating inside of it. We didn't just close and then run down from it. Typically when price runs into a gap like this, you want to see a sharp reversal. But if it starts consolidating in it, then most of the time it runs higher. And then we finally ran higher here. So you can see the market structure just shifted into a buy side structure. Not only that, we also had a bullish gap right here that you could have used. Filled that John up completely. Beautiful little fill of this daily gap, and then we started running up. We closed above, and what did we do? We tapped right back into this IFEG. Beautiful. Okay, that's how you identify structure on the daily time frame using gaps. Just basically paying attention to how it closes above those gaps. Lower time frame market structure typically involves confirmation using order blocks, IFEGs, and new fair value gaps that form. Okay, I'm done rambling with that. Boom. We are done with this lesson. Let's go. Let's go. Okay, any questions? It's pretty simple. In reality, it is super simple. Everything about it is simple. Thank you all for tuning in today. It is a Saturday, so you guys showing up here really shows a lot, guys. You will succeed in this field. This is effort that you're putting in. For me, like, I put this work in, I live stream it, I can upload it on YouTube, you know? I did my job. But you guys showing up live, that means a lot, guys. So keep working hard. You guys will succeed as well. Let's get it. Any other questions before I go? I'm always happy with everything you do. Thank you again. No, thank you. You always drop some beautiful comments, and I really appreciate it. I love being an influence on a lot of people. I love showing people and giving them hope that you can do this full time. You can actually read the direction of the market. And I've been doing this, guys. Like, if you genuinely scroll back inside of the Telegram, you will see all of these areas, because I've been trading for years, guys. I've been trading through this entire range. I even traded when it was running up here. I was trading when it was running up here. If you guys scroll up through Telegram, you will see my narrative in every single one of these weeks. You'll see the trades that I took from this weekly gap right here. You'll see me learn new things. Like, I took this trade from this weekly gap. I took a trade from this monthly rebalance. Like, this wick right here was a rebalance on the monthly. I took all of these trades. Even inside of this consolidation, I mentioned the trades that I was looking for on the daily time frame. Scroll up through Telegram and you'll see everything. I'm telling you guys, like, there's so much that you can learn, and I'm not just showing you guys right now looking at price previously. I've traded through all of these ranges. Trust, I've been following you. Legacy Futures came up since. Oh, since Legacy Futures. Nice, bro. I'm glad to have a platform where I can get a lot of new people coming in from Mamba, showing them that there's other styles of trading. Like, honestly, ICT and gaps and, like, this made way more sense to me than, like, trend lines or breakouts, support, resistance. So that's why I stuck with this, that I actually mastered it and I took the time to learn all this. It's less stressful, 100%. Alright guys, well, I'll catch you guys in the next call then. Breakout trading is very tricky. Yes, it is. Especially when you know about liquidity. Ever since I learned about liquidity, I was like, damn, this is how the market works. Not breakouts, not trying to hop in after it sweeps the high. Now I wait for a little pullback, tap into an IFEG, and that's when market actually runs higher. Alright guys, well, thank you all again. I'll see you guys in the next call.